Hi, this is Rudy Martin for Uncommon Wisdom Daily. Just 90 miles south of Key West, Florida, is a forbidden tropical paradise with pristine beaches, beautiful mountain vistas, and of course, some of the best cigars in the world. Cuba has been restricted to U.S. investors and visitors for the past 50 years, but it's possible that could eventually change. And when it does, we may see one of the most unique emerging market opportunities in years. Last week, in his welcoming speech to Pope Benedict XVI in Havana, Cuban President Raul Castro blamed the U.S. embargo for crippling the island. But he also highlighted the social and economic changes the government has instituted recently. They include eliminating food rationing subsidies, cutting 500,000 public sector jobs, opening up private enterprise opportunities for small businesses, permitting sales of homes, cars, and other big-ticket items, lifting restrictions on mobile phone users, and many other reforms. Critics argue that these changes are unlikely to stimulate much growth because Cuba is not a consumer-led economy. Its GDP is about $114 billion per year, and it imports 80% of its food as well as all of its petroleum, machinery, and chemicals. In order to get much needed foreign currency, Cuba relies on international tourism. Cuba's 2.7 million annual visitors bring in more than $2 billion a year. And when the United States does eventually lift its embargo, it could easily draw another 500,000 visitors there. In that scenario, Cuba would almost certainly get additional investment from companies like the Spanish hotel chain Sol Meliá, which manages a couple dozen properties on the island. And already, Air France, KLM, and other airlines are capitalizing on tourism from Canada, Europe, Russia, and Latin America. But don't book that commercial flight just yet. Resistance to lifting the U.S. embargo is high, especially in election years. So while other Latin American countries are increasing pressure on the United States to lift its restrictions, I don't see anything changing in the short term. But even still, many non-U.S. companies are ramping up investment in Cuba. For example, China has become Cuba's #2 trading partner after Venezuela. Meanwhile, Brazilian companies are investing $800 million to modernize the port of Mariel and bring back Cuba's sugar industry. And Spain is leading a consortium to explore for oil off Cuba's northern shore. Cuba's impact, if it rejoins the international community, could be bigger than most people assume. Its 11 million people would rank it between the size of Los Angeles and Chicago, and its landmass is about the size of Ohio or Virginia. Ultimately, it's going to take more pesos, reals, rubles, euros, and yuan to make Cuba into a vibrant economic force in the Caribbean. But investing in the first mover companies, those that are already positioned to benefit from recent changes, may be the easiest way to make a profit on Cuba's newest revolution. I'm Rudy Martin for Uncommon Wisdom Daily. Thanks for watching.